These are 5 risks that may potentially affect your investment. The first one is regulatory risk. With one policy, directive, or law from the government, a business can crumble. There was a particular year that this company called Allride flooded major cities with their bikes. Their intention was to solve public transportation problems. Based on government, they said the rate of crime increased because people can now easily go on bikes and rob people. A directive was made that sent that company out of business. The second type of risk is market risk. You may start a business today and the market will say they don't want your product or service anymore. I read this article where they said DSTV lost over 1.4 million customers in the last 2 years. When you think about it, why did that happen? Because people are now gradually moving to alternative. If an average Nigerian wants to buy TV right now, the first option that a lot of people go for is smart TV. You can do YouTube, you can do Netflix, you can do Prime, you can do all of those things that DSTV offers before. Even on YouTube, a lot of your favorites are now having their own YouTube channel. So why would I want to go on DSTV when I can easily watch this person's channel on YouTube for free? Of course, using my data. Next type of risk is credit risk. Even though we say that government bond is an investment that carries very minimal risk, it still has a measure of credit risk. This can be seen in the example of Ghana. In 2022, Ghana defaulted on its foreign bonds. They couldn't pay. So after back and forth, they had to now restructure that investment. So sometimes it happens that government may not be able to pay their investors, even though it has not happened in the case of Nigeria, at least to the best of my knowledge, in the last 10 years that I've been investing in bonds. Next type of risk is liquidity risk. And this talks about the ease of converting your investment to cash, which is why we advise people not to put all their investments in an asset class like real estate. Even though real estate is fantastic, don't put 100% of your investment in it. We've seen cases where someone has real estate portfolio of 1 billion naira. Person needs 20 million for an emergency situation. Now he does not have the money. He is now left with the option of either selling one of the property or using the property to borrow money. So if you want to sell one of the property and you want to sell it on time, you may have to sell it as distressed, meaning below the market value. Because sometimes it may take 1 year before you sell a good property. You don't have that kind of time. Liquidity risk. Last type of risk that I want to mention in this video is foreign exchange risk or currency risk. If you do a business, you must understand the dynamics of exchange rate and you must be very flexible with your pricing.